I'd like to welcome viewers today to the Baird Governance, Risk and Compliance Showcase. My name is Justin Pritchard. I'm an MD in the Tech and Services team based in London, and I lead our efforts in GRC across Europe. And it's a real pleasure for me to have Justin Fitzpatrick with me today, who is CEO of FullCircl. Justin, why don't you give the viewers a little bit of your background and tell them a little bit about FullCircl until we get into the meat of the conversation.
Yeah, sure. Happy to. And thanks for having me, JP. So I'm Justin Fitzpatrick, one of the co-founders and COO of FullCircl. Prior to FullCircl, I was co-founder and CEO of another business in the GRC space called DueDil. And outside of that, I've had a kind of long association with UK tech and fintech in particular, where I was co-founder and board member of a company of an organization called Innovate Finance, which is a fintech members organization, which is the kind of voice of UK fintech. FullCircl actually has a really interesting story. Back in August of 2021, Andrew Yates, who is the co-founder and CEO of a business called Artesian, and I got together. And we saw an opportunity to create a business that could be a kind of powerhouse in the UK RegTech space. And that was really the beginning of what became FullCircl. So we merged my business, DueDil, and Artesian Solutions together and rebranded as FullCircl just over a year and a half ago. And FullCircl really aims to solve three problems for our clients. We help regulated financial institutions win, onboard, and monitor their customers. And so we today work with about 60% of the top 25 UK financial services institutions, helping them in those three areas.
Interesting. Thanks for the intro. First area we were going to discuss is sort of point solutions versus enterprise, and particularly given your background, right, and the combination of the two businesses, I think it'll be interesting to sort of hear your views. But when you think about clients and types of clients out there, what are you seeing in terms of people looking for either sort of a one-stop shop, so kind of an enterprise-wide solution, and looking perhaps at your sort of full suite, versus point solution where they might be trying to pull together maybe a best of breed, and they're maybe looking for parts of your solution, but not all of them?
Yeah, it's a really good question. And over the last 5 years, I'd say that the tide has kind of ebbed and flowed on this one. So, 5 or 6 years ago, I think there were a lot of large incumbents who had, I call it one ring to rule them all. It's kind of the enterprise suite, which people get lured into the idea of a single vendor and then realize that there's a ton of configuration and implementation that goes into actually getting to a workable solution. I think we then saw the pendulum swing the other way when all of the money started flowing into RegTech, and because of the nature of how you have to build a business in RegTech, a lot of those companies were becoming point solutions, and some of them were very good point solutions. I think the challenge that the market has is recognizing how large financial institutions in particular procure and buy solutions. And so, what we've seen over the last few years, I think, is a settling out of this issue where we've kind of moved away from this very binary, like enterprise solution or point solution, and actually it's really about time to value for the client. And so we have put a very big emphasis on partnerships within FullCircl. Part of the rationale for the merger between DueDil and Artesian is that we felt we could cover a bigger section of the problem space for our clients, and that's proven to be true. But these organizations are so complex, and these digital transformation projects are so all-encompassing that there really isn't anybody who can solve the entire problem on their own. And so inevitably you end up getting implemented alongside other solutions. And, the kind of challenge for us has been, how do we make that process as easy as possible for our clients? So one way we do that is by having, solutions that we can deploy incredibly quickly. So, our web application, it's a SaaS application. You just need an email address and a password. Our API, it's very well documented. We have a lot of support for it. So that's easy for a kind of knowledgeable developer to interact with. But the fact is that with pressures on budgets, a lot of organizations just don't have the resource available to be able to integrate these solutions. And so, that kind of then puts the onus back on you as a vendor, I think, to find creative ways of bringing the solution to the client. And that's where our partnerships with people like Encino and Actress and others have become incredibly important to help us, lower the barriers and get our clients to value quicker.
Next, the other topic we said we would cover a bit was around kind of continuous monitoring. I suppose we've seen a lot historically around sort of onboarding, and knowing who you're dealing with sort of at day one. And it was a little bit more optional or vague in terms of the regs around, how often do you need to sort of check who you're dealing with? What are you seeing? And then particularly you have things like the Ukraine situation where, all of a sudden people are, historically could deal with some of these people, and then going forward, it's like, actually, maybe I can't anymore. What are you seeing in terms of continuous monitoring, and really whether that, a client saying that's a prerequisite now, it's a must have, where are they on that in terms of being effective compliance?
It's a great question. And, I think, our observation is that this is a big problem. It's a problem for the entire industry, and it's one that, frankly, I think a lot of people would admit, maybe not publicly, but I think they'd admit that it's an area where there are a lot of folks who are on the back foot with this. And, that's partly a reflection of what we've seen over the last few years. And, the pandemic definitely had an impact there because, all of a sudden, digital transformation plans got pulled forward probably by 2 or 3 years. And the emphasis was on, getting the support to the businesses and to the customers. And so that required, getting people, accounts opened, products out. And, I think people were focusing rightly at that point in time on, are these people that, are these entities that we can do business with? And, we were big beneficiaries from that. We power the account opening and onboarding journeys for a lot of big banks and fintechs, including, Santander, corporate and commercial, Tide, Metal. But, obviously that's only one part of the financial institution's obligation. And I think what we've seen from regulators and from the institutions themselves is a shifting focus onto, what happens in life, what happens after you've onboarded that customer? How does your relationship evolve? And, there are sort of at least two main pressures, I think, here. One is the regulatory pressure, which we've discussed, but the other pressure is, I think, a business pressure. Increasingly within our clients, we're seeing pooled coverage models at the lower end of the market. So, at the kind of lower end of SME, there are very few relationship management based models where it's where you have one relationship manager. Increasingly now you have a pool of relationship managers who might be responsible for 10, 20, 30,000 customers. And so the challenge then becomes, well, how do you know which customer you should be interacting with at which time? Because the old way of risk rating them on the way in and sticking them on the shelf for 1, 3, 5 years doesn't work anymore. So I think, we're going to see a continued evolution in this area where, there's a backlog that people need to get through to sort of, refamiliarize themselves and get comfortable with their back books. But, going forward, the way to solve this problem, I think, is taking an approach that is focused around, perpetual KYC and continuous monitoring. It's a huge area of investment for us over the next year or two.
And I suppose continuing on in that topic, then when you think through clients trying to adjust to regulatory changes, to market conditions, and then when you're out and effectively selling into them, how many of them are saying, look, actually, we just want some pure software here, just give us the tech, sort of leave us alone, versus they want, a tech-enabled service where actually there's a little bit more of the people piece to it coming in to kind of help sculpt, perhaps, work through the processes, find out where the flaws are, and try and deploy a solution on that. So it's more that sort of, how many clients are saying actually we want a tech-enabled service, or we're wanting pure software.
Yeah, I think that there are two considerations here in figuring out the right answer to that question. So one is just the complexity and perceived risk around the customers. There are certain types of customers where a tech-enabled approach that is still, has a layer of human judgment. That's going to be important, and I don't see that going away.
Yeah.
And that's because of issues around data quality, data availability. Again, just the value and complexity of some of these customers. The other factor, I think, though, is really the maturity or ability of the organization to adopt technology as the solution, and their comfort with that. So, I think we'll see, a kind of digitization and automation of the lower end of the market, the kind of smaller end of the SME spectrum. As you start to get up into, multi-director, multi-entity, multi-jurisdictional businesses and customers, that's where, you have the scope, I think, and it starts to make sense to potentially introduce a human overlay. But, with all of these, examples, the thing that shouldn't be lost is, I think, the sheer scale and volume of the challenge. And so, we did a proof of concept internally to illustrate the value of an automated solution to our, frankly, for ourselves and our customers. And it's something that I presented last year at a Transform Finance seminar. We took a portfolio of 1,000 UK SMEs, and we tracked the changes in those businesses over the course of a month. And we found that within that portfolio, about 30% of the companies had registered a change within that month. And the total number of changes against just those 1,000 companies was greater than 10,000.
My God.
So, you start to think about an organization that, has 5,000, 10,000, 20, 30, 40,000, 50,000 customers or more, and you're suddenly inundated with, events and changes around that business. And so, understanding that those changes are happening is one part of the challenge, but very quickly, the next part of the challenge becomes, how do you interpret those changes in a way that's meaningful for the client, so that they can figure out what the next best action is? And so the solution that we're developing, kind of builds on our kind of strengths around understanding the data and bringing the data and insights to the surface. But we're now overlaying that kind of policy lens for the client, which says, I might need to know about these changes, but I don't need to action every single one of them, right? So which of these changes, are for information only and can just update my CRM, versus which changes need to go to somebody so that we can re-KYC the customer, or, run it through credit approval again, or whatever the action might be.
Interesting. And so are clients then starting to share with you, in a sense, their regulatory profiling, so you can work out whether, if there's a change happening in this data, whether that's sort of green, amber, red, when you look at their business and the sorts of things they're doing with that client? Because I can imagine some of that stuff, as you say, there's a ton of noise, but some of those, actually, that's a really material change, particularly when I look at your regulatory profile. There is definitely an action point that you need to do something about here.
Yeah, and I think it, one of the, not surprising, but I think really encouraging signs of the dialogue that we have with our clients is that they have been very open to sharing, what their policies are and which things they see as, critical events versus, informational, kind of information only events. And so, what we're able to do with our rules platform is basically mirror those policies within our environment, so that as changes are happening within a business or a collection of businesses, we're able to run it against the policy of the client and immediately flag the things that are high, medium, or low risk.
I've heard from a few people that are saying they're seeing clients out there now trying to say, look, what if we didn't think of compliance necessarily as a regulatory pressure, as a reporting requirement, almost as a cost to do business, but we started to think about how you present them in such a way and become a top of class citizen around compliance, and actually start to then use it more as a driver for business. Be recognized as somebody that, is incredibly compliant, is actually pushing ahead in terms of those sorts of areas, and using it as an advantage, whether that's to kind of attract customers, attract shareholders, because if we all look at a great way to blow up value is to kind of, get slapped by a regulator. So as a way to kind of assure shareholders, even potentially retain staff. Are you seeing any of that dynamic playing out, or is it still a bit early to get a sense?
No, I think that's absolutely right. I have a slightly different spin on it, in that, a big part of our heritage, when we were, as we brought kind of FullCircl together, there was a lot of overlap in terms of, us really believing that the flip side of the coin of risk is opportunity. And, one of the areas where we're seeing, having a robust compliance solution in place, benefiting our clients, is their ability to form deeper, stronger relationships with their customers. And that's partly because, it's reducing the amount of manual work and toil that goes into remaining compliant. So it frees people up for having more meaningful conversations with their customers. But it's also, kind of points to this issue around customer intimacy and anticipating what the customer needs. And so, that monitoring solution I described to you, we've talked about it in a compliance context, but it works equally as well, if not, better, in a context where you're looking for signals that the customer might be open to, something else you have to offer them, right? So, what are the, let's not just consider the negative signals around the business, like where they've had a disqualified director or an adverse material credit event, but let's look at positive situations where they've had growth in headcount, they've started to import and export more. And so, these are all markers that maybe they're primed for other products or solutions that the financial institution can offer. So I definitely think that this, if you get it right, and you have the right technology in place, it can kind of serve double duty in not only helping keep your business safe and that being a reputational advantage, but also, giving you the ability and new tools to leverage your teams better and have, deeper, more meaningful customer relationships.
That's a great upside, actually, as you say, to that monitoring piece, spotting the signals for growth, right? And be able to say to the customer, we're here to support you.
Yeah, absolutely right.
Okay. Well, Justin, I wanted to thank you for taking the time today, share your views on these topics. It's greatly appreciated. It was also really good to hear a little bit more about FullCircl. So look, thank you again for taking the time. It's been a pleasure to have you.
Hey, really, thanks again for the invite. It's great to speak with you more.